Markets brace for confirmation of historic job losses in the US. Guys, today we had ADP National Employment data, which showed that more than 20 million Americans lost their jobs in April. However, this didn't come as a surprise to markets, to be honest, because like we've been saying for a long time, we've been getting these weekly updates on the US labour market in the form of weekly initial jobless claims data. So basically every week on Thursday at 1:30 London time, the US releases this data which says how many people claimed unemployment benefits for the first time. So basically this ADP release that we just got pretty much showed what we expected. About 20 million people lost their jobs in April. Now this is expected to be confirmed on Friday. So remember guys, NFP, normally the most important data of the month. However, like I was just saying, this data at the moment is quite backwards looking compared to those weekly updates we've been getting. So market's probably not going to react too much to the data this weekend, but nonetheless, on Friday, official jobs report is expected to reveal pretty much the same thing as ADP today, more than 20 million Americans losing their jobs in April, which is a shocking number, just unprecedented. And it's only something as unprecedented as the great coronavirus lockdowns that could produce such an adverse economic effect. But guys, literally like I was just saying, markets probably not going to react because all of this is known. All of this is already being priced in. So what are markets trading off of at the moment? Well, markets are very forward looking, okay? So the main thing that markets care about now is how do we recover from this economic crisis? So there's various different scenarios that all the analysts have been talking about. Are we going to get a V-shaped recovery, which is a dip down in the economy, but then the economy goes straight back up again? Well, that would be hugely bullish and stocks would be rallying even more than they already have if that was the case. Markets also thinking about maybe a U-shaped recovery, which is a bit like a V-shaped recovery, but it's just that bit in the middle where the economy is really bad, takes a little bit longer, and then a rapid recovery, say in 2021. Or is it going to be more of an L-shaped recovery where we go down and it takes literally like 5 years for us to get back to pre-coronavirus levels? We don't know, guys. We don't know which of these routes it's going to take. At the moment, markets seem to be pricing somewhere in the middle of like that U-shaped recovery. Basically a recovery that really gets kicking towards the end of 2020 and in 2021. So what could affect this recovery? Well, there's so many things. What if there's a second outbreak of coronavirus? Obviously that would slow down the recovery process dramatically. I mean, we could even have lockdowns again if there was another big second wave of the virus. So markets are really attuned to health updates for now. Can we get a cure? Can we get a vaccine sooner than expected? Markets are going to be watching the numbers, the new case numbers in all of these countries that are opening up. Does reopening cause another spike in cases? All of these things are what is driving market sentiment at the moment, guys. And we are going to be all over all of these themes, as we always are at Freak Network. So do check out our memberships. That is pretty much it from me for now, and I will see you in the next one.